Hi everyone, my name's Darryl Panes, CEO of As Good as Gold Australia, and today once again I'm joined by my brother Brian and partner at As Good as Gold, and today we interview Chief Economist John Adams. Good afternoon, John.
Good afternoon, Darryl and Brian. How are you going?
Good afternoon, John.
Oh, yeah, we're doing very well, aren't we, Brian?
We're doing very well, and the business As Good as Gold is doing extremely well, but we're extremely busy. So, let's get going with this one and see if we can get a bit of economic knowledge out of John.
Absolutely. Well, it's always great having John on board, of course. And look, at the moment, Australia and the world are drowning in debt. There is no doubt at all about that. And when I think of debt, Brian, I'm reminded of an occasion, an incident where you and I were at an event together. And Vern Gowdy was on the stage at the time. Young lady stood up and asked a question of Vern. And she said, with regards to debt, and she said, is it possible, because I've been watching the speakers over the last few days, and they're a different demographic. And she said, maybe, is it possible that young people today have learned how to handle debt better than their predecessors? And Vern said, Madam, I do not know of any other way to go broke than to have excessive debt. And I think that applies, nothing's changed. Excessive debt sends you broke. And at the moment, Australia and the rest of the world are drowning in it. So in a few days' time, a considerable event is going to take place, John. We're just a few days away from the start of a major cutback in economic stimulus, especially JobKeeper, JobSeeker. What I'd like, if you could, is to provide us an update on what you expect to happen on the 28th of September, just a few days' time.
Darryl and Brian, so obviously COVID-19 happened around February. We've gone into a huge lockdown. Victoria's still in stage 4 lockdown, in terms of Melbourne. We've seen unemployment go up quite a bit. Particularly it went up to 7.5%. Now we're gonna inform the audience about why did last week unemployment reduce, because I think that statistic that is quite misleading. But the real unemployment horror of what we've done with this COVID-19 lockdown has been masked because of all this stimulus. And we've had about $19 billion of household stimulus that's been pumped into household balance sheets. A big chunk of that is in terms of the superannuation, where people could draw down $10,000 last financial year, $10,000 this financial year. So that's been the biggest amount of stimulus, about $19 billion. JobKeeper is about $7 billion. JobSeeker is about $7 billion. And what we're going to see starting Monday, the 28th of September, is the initial cuts to JobKeeper and JobSeeker. So with JobKeeper, so the first thing is with JobKeeper, the eligibility is going to tighten. So a lot of people who are not going to be eligible for the payment. But then those who are eligible, rather than receiving $1,500 a fortnight, if you are working more than 20 hours a week, where you go from $1,500 to $1,200 a fortnight. If you are working less than 20 hours a week, you go from $1,500 a fortnight down to $750 a fortnight. And that will result in a huge fall in income for businesses and for workers. So what I've heard anecdotally is that quite a few businesses, small businesses, medium-sized businesses, they have been holding on because of these JobKeeper payments. And once JobKeeper ends, some of these businesses will fold. But also some of these, in terms of some of these owners of these businesses, are going to let quite a few staff go. So I've already, even in terms of white collar staff and some of these big corporates, some of the big construction companies here in Sydney, I've heard that they've already been told that there's no pipeline of money coming forward. There's no more stimulus. So people are going to be let go around November. So we're going to start to see white collar workers in particular go through a whole host of redundancies. And so I expect that starting next week, we're going to start to see unemployment go up. and that's obviously what the government is forecasting. So that's JobKeeper. Now with JobSeeker, so what it was is, so everyone is entitled to, if you're unemployed, you're entitled to New Start, which is the basically the unemployment insurance. And then there was JobSeeker, which was an additional payment on top of New Start, which was about $550 a fortnight. Now, I think from memory, starting next week, that's going to reduce from $550 a fortnight down to $250. And so if you don't have a job, well, you're going to get less money starting next week. And obviously, if you're on JobKeeper and you no longer are eligible for JobKeeper, you're going to go to JobSeeker, and that's going to mean that you're going to have a lot less money than you did previously. And obviously, the big issue in terms of the current context, and you really hit the nail on the head, Darryl, is we have too much debt. And there's about a third of Australians with a mortgage, and those Australians that lose their job, or if they have a job, and it's a lot less income than what they had before the lockdown, there's going to be a huge issue around being able to service some of these mortgages. Now, we do still have mortgage holidays, but the banks are starting to ramp up pressure on people to start repaying these mortgages, although some people have been given an extra 6 months not to pay. So you basically have that sort of issue. So those who are, we've got a third who are got mortgages, we've got a third who are renting. A lot of those who are renting, particularly in some of the capital cities, don't have a lot of savings. They don't have a financial buffer. So if you still have to make the rent, if you have to make all the other payments around food and transport and all the things that you have, and you can't find a job and your income support has reduced, that's going to mean significant pain going forward, starting from Monday. And that's going to be a huge deal as to where the economy is likely to head going into the last quarter of 2020.
It's really interesting. I think that it's a bit of a mess, really. I was listening to a gentleman the other night who was a hotelier, and he said that he'd advertised for barmen and drink waitresses. Normally, under that set of circumstances, he would get around 400 applicants. Guess how many he received?
Normally 400.
Normally 400. The answer is 7. So he'd received seven applicants. And the reason for this, as he said, was that most of them were being paid more on JobSeeker than they would receive as a barman or a waitress at his hotel. So they were really finding it really difficult to find staff. The whole thing is a shambles. What your response to that, John? But this is what's going on.
What I would say is two things. The first thing is that, quite definitely, there have been examples of where people have been earning more money on JobSeeker and JobKeeper compared to even what they did before COVID-19. And then obviously there is incentive to stay on these payments. Now, the other thing is that even here in New South Wales, I have heard that certain small businesses, I heard about a fishmonger the other day who needed some help basically cleaning up some of the fish, and he couldn't find someone to actually do that job. We know that in some regional and rural areas of Australia, farmers are struggling to find workers to pick the fruit, because usually it's the backpackers, but because the border's closed, those backpackers aren't there. So there definitely is some work that's not being filled because of the welfare payments, but I dare say that work is going to mean lower income for those who can get those jobs. But I don't think there's going to be enough jobs to offset the number of Australians who are going to be weaned off some of these payments.
Yeah, well, we definitely can't afford to keep giving away free money any longer. That has to be reduced dramatically. What's the current deficit in Australia? Can I ask you that, John, at the moment?
So the government put out a bit of an update around June of this year, and they projected that the deficit for last financial year, which is 1920, was going to stand at $85 billion, whereas the projected deficit for this financial year, which is 2021, it was going to be at $185 billion. Now these are staggering sums. When I was working in Parliament back in 2012-13 for the Coalition, we were pulling our hair out when Labor was running a deficit of $50 billion, and here we are nearly 8 years later, and we're running a deficit almost 4 times as large. Now, I should say on the 185 billion for this year, this was a projection before the second stage lockdown for Victoria. But also, and obviously, why is that significant? It means that there's going to be lower tax revenue, lower economic growth that has to be worked into some of these forecasts. But I dare say that the government is going to be pushing a lot more stimulus. Look, they're going to be pushing a lot of stimulus in the budget coming out on the 6th of October, which we're going to talk about. And some of that stimulus is going to be in different forms relative to income support. So I mean, I'm expecting a deficit of more than $200 billion, which is financially, it's a catastrophe for Australia.
Totally unacceptable.
Yeah. John, I'm no Rhodes Scholar when it comes to economics. That's why you and us are joined together. But I do understand this. If you have a deficit, it's a borrowing, right? Borrowing has to be paid back. I can only see 2 ways of paying this back, and I'll just reiterate. Paying back means higher taxes, or the loans get extended and the interest rate on those borrowings become even greater. So I personally cannot see any way how Australia is going to avoid not only recession, but a depression. And if you can give me a reason why that's not going to happen, I'd love to hear it, because I can't see any way of not only Australia, but other countries who are doing the same thing, paying back this sort of debt.
So depression's possible, but what I think, and we're going to have a talk about this soon. So with my professional view is we've got stagflation now. So stagflation is low economic growth, high unemployment, and rising prices. And so you look at the money supply, it's growing at the fastest rate in 11 years since 2009. And we're starting to see, even though the government is trying to sell this false message of deflation, we don't have deflation. I got an email the other day from a fan of mine who said that every time she goes shopping, she notices the food prices are going up. So with all this money printing, they're financing all these deficits through money printing, and that's obviously going to lead to higher prices. And I dare say that stagflation phenomena is going to intensify. And just to harp on the point, Brian, about in terms of can we pay the debt back? Well, I mean, so you can extend the loans, you can raise taxes, or you can cut spending. And one of the points we're going to get into soon is I've been talking to several politicians this week from Canberra about their views about our ability to repay this debt. And the view in Canberra is that they're afraid that the Australian people have no appetite to wear cuts to government spending so that we can actually pay back in terms of the debt. So like a household budget, if you're spending too much, you got to cut spending, and you got to start using some of that surplus money to pay down your debt. Well, the politicians don't think that the Australian people are going to wear that, and so that's why I think stagflation could easily lead to runaway inflation, if not hyperinflation, if we don't actually get on top of these problems that we have at the moment.
Yeah.
Well, I would have to agree with John or the lady that he was referring to, because I'm continually asking myself the question, how do people afford, the average person in the street, how do they afford to pay for their groceries on a weekly basis? How do they afford to pay their mortgage? I ask myself the question because I walk into a driving home, I'll stop in and get some fuel. Then I'll stop into the chemist maybe. Then I'll stop in at Foodland. Then I'll stop in at the butcher. And each one of these stops, I put my hand in my pocket and I withdraw $50, and there's very little change at the end of that transaction. And I think to myself, now, from the office to home, I just spent $200. So you don't notice it with a credit card, ever. No, you do not notice it with a credit card. It's a swipe and it's gone. But when you physically putting your hand in the pocket, withdrawing $50 4 times, this is all over about a 45-minute trip, you've got to ask yourself the question, how are people affording this? And I keep asking myself the question, recognising how much many Australians earn. walking out with full shopping trolleys. I just don't know at the moment how they're managing to do it.
Well, borrowings and
Well, that's right.
and inflation. You know, they're both going up, and as John seems to be right, there's going to be a crunch at some time in the very near future that this whole thing is going to come down, well, like a house of cards.
Well, it works until it doesn't.
Yeah.
That's really the point. It works until it doesn't. We're getting really close to that point.
We're playing a game of musical chairs, and those chairs are being pulled away from us in a very quick fashion. John, I have a question. Last week, the government made great fanfare of unemployment statistics published by the ABS, showing that 111,000 jobs were created in August 2020, reducing the unemployment rate to 6.8%. Why shouldn't Australians celebrate over these statistics?
So probably a couple of points. The first one is that if you read the fine print of the ABS, there were no new employees that were created. So the 111,000 jobs, it was classified largely as, what they would call owner-managers. So these are of either incorporated or unincorporated businesses that formed in terms of August. So breaking that down, what does that mean? We're talking sole traders, we're talking people in partnerships, we're talking people who may have established a company and who are doing some work here and there. But basically, there was no new employees created during the month. The other point is that when you look at the hours worked, that hardly moved. So even though you've got 111,000 people now doing something, not a lot of them actually did a lot of work in terms of hours. So remembering that the definition of employment is 1 hour a week. So in theory, if someone had a full-time job, lost their job, and then needed some money to get through the current situation, and they went down to Darryl's and washed it and said, "Can I wash your car for $50?" And Darryl and then they said it's going to take more than an hour, and then Darryl paid more than $50 for his car to be washed. That person would be classified as employed. And that's what the statistics really reveal, is that a whole bunch of people short on money had to go off and do some sort of job. Well, they didn't do many hours because the hours worked didn't go up dramatically. But that's what the 111,000 people represent, and that's why the unemployment rate went down to 6.8%. So there's probably two big concerns when you look at this statistic. The first one is that when you look at the business sector, I mean, they are still shedding jobs. And as we just said before, when particularly when JobKeeper reduces, you're going to see more job shedding in terms of employees in October, November, December. That would be point one. But even if some people who lost their job are doing some sort of work now, even if it's only a few hours a week, you have to factor in, well, they've just experienced, even though they're technically employed according to the statistics, they've experienced a huge loss of income. And that loss of income, when your prices is still going up, when you've got debts, when you've got rent, when you've got food and education and transport and all the other costs involved, that's going to cause a huge problem in terms of people's ability to be able to meet all their liabilities and in terms of their obligations. So for those reasons, I don't think the fanfare that Josh Frydenberg, he had a press conference last week and said, isn't it fantastic that unemployment is now down to 6.8%? Once you look into the fine print, I don't think it's worth celebrating. And obviously the RBA is still projecting that unemployment is going to go to 10% by Christmas.
Mm-hmm. So that's why when you see a lot of politicians interviewed and they're humming and hurring, they see the number of 111,000, but you only had to work for an hour and you were off the unemployment benefit. So which I would say a lot of politicians wouldn't even know that. Because I have interviewed a few politicians in my state, and some of them don't understand the basics of economics. Darryl?
John, we mentioned earlier potential cuts to JobKeeper, JobSeeker. But what's really interesting here, but not all that surprising, is that we've got calls from the ALP for for cuts to job seeker and job keeper to be reversed. Now, this is really interesting because about the only thing these political parties agree upon is that they don't take a pay cut themselves. Isn't it interesting? They disagree with every...
Never an argument.
Disagree on all other policies except for this one. No, we all agree to keep no pay cut for ourselves.
Yeah.
But so keeping this in mind, John, why do you think democracy is a guarantee that stagflation is going to continue?
One of the revealing things that I had a chat to when I talked to some politicians during the week on the phone is the so a couple of points. The first thing is in the budget we know that stimulus is coming, tax cuts and infrastructure, and in terms of a few other things. So there is an economic imperative that we have this huge debt bubble, and the RBA and the government is hell bent, determined not to let this debt bubble collapse because that would go into a depression. And people think that not only is that bad economics, but it's going to be a bad political disaster. But when you talk to politicians on the phone, they basically say that everyone's just focused on winning the 2021 federal election. And the reality is that too many Australians today don't want to go through economic hardship, particularly because this was created by because of the decisions of the politicians to implement the lockdown. So what I think is going to happen is we will see some stimulus that's going to be revealed in the budget. There's going to be some economic pain. Unemployment is going to go up. But what I dare say we're going to see is even potential reverses on these cuts to job seeker, job keeper, because two things. Labor's trying to make this into a political issue, but also I do think that the political standing of the government could fall because so many people are in financial dire strait. And today, compared to say back in the 1920s and 30s in Australia, too many Australians, they're expecting something for nothing. And because Morrison is hell bent focused on winning the next election, I got told point blank, the government's going to go for broke. There is no expense they're willing to that they're not willing to spend on if it means that they can maintain public support and actually win the 2021 election. So I think that because there are so many people who are going to be financially hurt with some of these cuts, and because the economy is going to get weaker in the last quarter, because everyone is focused on politics, that's going to result in more stimulus, more money printing, and we will have to sort of go through this process. We'll go through this process until the economy fully opens up. One of the things I would say, Darryl and Brian, is a lot of observers and people watching this show and others are looking at the situation saying, well, what's the right economic decisions to make for the country? And and that's not how Canberra works. So Canberra works is what's the right economic policies to benefit the government politically. So politics is driving the economics, and the politics dictates that if too many people are hurting, you potentially could lose office. Therefore, I think we're going to see more stimulus from the government going forward.
Yeah, well, it's a little bit, it's very much like Egon von Greyer's comments, isn't it? We keep getting back to that. His comment is, all politicians lie because they provide the story that everyone wants to hear. If you've got a $40,000 grant at the moment to buy for a first home buyer to buy a new property, and someone wants to take it away from you, then you're not going to vote for the party that wants to take it away from you. You're going to vote for the party that's prepared to offer it.
Yeah, you want a short-term fix.
Exactly. And I see it at the moment. $40,000, this is all part of the stimulus package, $40,000 up front, free money to buy a property for a first home buyer. $1,000 now, Northern Territory, if you an incentive to go to the Northern Territory, the state government will pay you $1,000 for doing so. There's the incentive to go to the Northern Territory. And I believe that every $5,000 that you spend after the initial five, you get another $1,000 each time. So there are incentives everywhere at the moment to spend money that you really don't have. So it's got to come to a bitter end, doesn't it, John?
So when you say it will come to a bitter end, the bitter end, if we don't reverse course in terms of these deficits, this stimulus and this money printing, we will see Germany 1923. We will see the Australian dollar erode in terms of value, and stagflation is going to get worse. And because we have a huge amount of foreign debt, if our foreign creditors lose confidence in our ability to repay this foreign debt, the dollar could fall, could crash like a stone, and then you will see like huge inflation, runaway inflation, potential hyperinflation. So that is the risk where we're now sitting. Now, I did want to actually pull you up on a point, Darryl, about what Egon said, because so when Egon von Grey says that politicians lie because that is in their political interest to promise free stuff. The one of the interesting things that politicians in Canberra have communicated to me is they feel that if they try to tell the truth, if they try to have a frank conversation with the Australian people, the people will not cop it. So part of it is that the politicians they're willing to lie, they're willing to say whatever they want, but some of them who know what's really going on, they basically say that because of democracy, here's the thing, there's enough voters out there that expect something for nothing, that if we actually put all the cards on the table and say we need to actually have huge cuts to government spending, we need to raise interest rates, we need to get our business costs down, we need to raise productivity, we need to become more internationally competitive, that no one wants to go through that pain. And if you try to push that on the Australian people, they will reject it. I mean, this morning as I was coming into Sydney, I was having a conversation with John Hewson. So John Hewson's he's a friend of mine. He ran for Prime Minister in 1993 with a huge reform package in terms of fight back. He's the last politician in Australian history that I can remember that couldn't care less about politics, and he tried to put everything on the table and explain to the public these are the big changes that we need to make to take Australia to the forward into the 21st century, and he lost. And you talk to people in the Liberal Party, and they just say that what's the point of telling the truth when you can't win an election?
Yeah, what people haven't worked out, though, not all, but many have not worked out, is that free money never works. If it did, why do any of us work at all? If free money worked and it was just a matter of giving it away, then none of us would have a job.
If it can solve an economic problem, why we just keep on printing?
Why should so many of us work so hard for those who don't want to work at all?
Yeah.
I mean, it's never worked.
Yeah. Before I ask this next question, a thought that came to my mind when we were talking about this, and the quote goes something like this: "When you dug yourself into a hole, stop digging." All right, so you need to do that to get out. The next question, John, on the Australian economy. In the past 24 hours, we've had Deputy RBA Governor Guy Debelle give a speech about the state of the Australian economy and the future options for monetary policy. What did he reveal in his speech, and what are the implications for the Australian economy moving forward?
When I was reading the newspapers last week, that they were pretty much saying that this was going to be a landmark speech, that Guy Debelle was going to sort of provide some forward guidance. He said a couple of interesting things. He said that fiscal policy, all this government spending by the federal and the state governments, that had more of an impact than in terms of monetary policy. Monetary policy has been huge in terms of what they did. I mean, they did a number of things. They lowered interest rates to 0.25%. They started quantitative easing. By basically buying bonds. So technically they call it a yield curve control. So basically the 3-year bond, they want to keep that interest rate at 0.25%. And so they've been buying bonds to basically keep the interest rate at that level. They also provided very short-term funding for the banks. So they've provided, they announced so initially it was 75 billion. Now it's up to $200 billion, where they're going to give the banks a $200 billion loan for 3 years at 0.25%. And this level of funding for Australia's banks is lower than what they could get on the international market. So where does the $200 billion come from? They basically just printed it. So they basically have provided extraordinary support to help to help the banking sector through this period of time. And basically they sort of said that that's not going to be enough. There has to be more stimulus going forward. So they outlined a range of options as to, they said that they're not going to do anything until the budget, and then they'll see how the budget plays in terms of the economy. And then by the end of the year, going into 2021, we could start to see more stimulus measures. And those measures could be from anything from trying to lower the Australian dollar in terms of foreign exchange manipulation, because they believe that a lower dollar on the international market will actually help drive exports, which is, again, a very phony type of argument, because that's never been proven to be correct. It can have a short-term effect, but the long-term effects are pretty disastrous. So they could do more QE by buying more bonds. They could lower interest rates from 0.25 to 0.1, or the more dramatic option is they could go to negative interest rates, noting that New Zealand as well as the UK have already said they're getting ready for negative interest rates. So they're the things that are likely to come forward going into 2021. So obviously I've been very public about what politicians say to me, John, and this is private conversations, what should we do? I say, well, you've got to pop the bubble. You've got to raise interest rates. You've got to cut government spending. You've got to lower taxes. You've got to reform industrial relations and energy policy. We've got to lower business costs. We've got to become more competitive, and we've got to produce goods and services that people around the world want to buy at a price that they're willing to pay. There's no magic pudding around this. It's a straightforward solution, but they basically say, well, we can't win with that, so we've got to do something else. Well, what else can you do? You've got to keep the bubble going, and the bubble keeps on getting bigger. And the bigger the bubble, to save the bubble, you need more stimulus. So we're at the lowest rate interest rates and QE that we've ever done, and they're going to push that even further going to 2021. And obviously we're going to see more fiscal stimulus going forward. And I have to say, one of the most outrageous things that the Deputy Governor said when he gave his speech, he said it was appropriate for the strong balance sheet of the government to provide support to the balance sheets of households. Now, when you think about that for a minute, what's he really saying? So on the one hand, so I've got two kids, a 6-year-old and my youngest one's 1.5. Their future has, the RBA and the government has bankrupted my kids in order to effectively subsidise a whole host of Australians who borrowed to the hilt, who basically don't want to face the music right now. But then on the other hand, why do they provide this support to households? Households would believe because government cares about them. The reality is that this was all about bailing out the banks. Because if too many Australians defaulted on these mortgages, Australia's banks will basically go bust. And so effectively, we've sold 2 generations of Australians down the river in order to bail out the financial cartel that runs this country. And that, given that I've got 2 kids who I am very conscious about what sort of economic future they're going to have in this country, I just thought, when he said this was appropriate, I just thought that was completely outrageous.
Here's what intrigues me. John's talked about interest rates, and that's probably all the ammunition they've got left in their arsenal. I've got a question to ask, and that is this. If you lower interest rates 7 or 8%, which the Australian government has, and pretty much and the United States government has over the last few years, and we're in the position we're in now, we're in diabolical strife. Our debt levels we've already agreed upon are higher than they ever have been in recorded history. That's the position we've placed ourselves in, lowering interest rates and increasing our spending habits, stimulus spending. What on earth would give anyone the impression by lowering interest rates another 0.5%, 0.75%, so we go to zero, negative? What difference is that going to make other than And the simple answer is it's going to kick the can a little further down the road. But what else, how can that be productive if we haven't made any progress to date?
You have made a really good point, Darryl. Everything they're doing now is not productive. It is kicking the can down the road. The thinking inside Parliament is extremely short term. I would have hoped that the thinking among the senior public servants, the RBA, some of the business community would be a little bit more long term. It'd be a little bit more responsible. But no, all the people who are holding the key positions in this country, all they're trying to do is save their skin. Because if we don't kick the can down the road, all those who have made huge wealth in property, huge wealth in terms of the banking sector, I mean, people have made massive fortunes by getting everyone else into debt. And if you bring this if you bring the show to an end, a whole host of people are going to basically be financially destroyed, and they're trying to protect all their buddies.
It's not really what I wanted to hear, but it's accurate.
It's accurate, and it's the truth.
It's the truth. John, federal budget is being handed down on 6th of October of this year. Given the state of the Australian economy, what are you expecting the government to announce? And what do you think this will mean for the ordinary Australian going forward?
During this conversation, we have touched on in terms of this debt bubble and obviously in terms of the need for more stimulus. Now, going forward, the expectation is that it's going to take several years for the economy to recover to get to anywhere near the pre-COVID levels. So basically, as the business sector continues to struggle going forward, where are the new jobs going to come from to stop these people from defaulting on mortgages? The hope is it's going to be infrastructure spending. So the RBA, as well as the federal government, are hoping that not only the federal government, but the state governments are going to spend huge amounts on infrastructure spending. It could be from airports to water infrastructure to social housing to a whole host of energy projects right throughout the country. So I'm expecting that the big ticket item in the budget is going to be infrastructure spending. There's going to be some. So the coalition went to the election with 3 stages of tax cuts. Last year they introduced stage 1, stage 2, and stage 3 was supposed to come in a few years' time. I think they're going to bring those tax cuts forward. There was an article in the AFR only in the last 48 hours where they're going to provide some more incentives for the business community to take on more debt. So we talked about too much debt. Well, they're going to try to spur an extra $140 billion of commercial lending, and that could be from commercial property to plant and equipment to whatever the case that industry may want to invest in. But basically, they're going to try to push more debt. So they're going to have a whole bunch of incentives around that. Obviously, they need to provide help for the construction sector, and so I do expect there'll be more incentives around construction, but also in terms of home building. So, but also in terms of people being able to buy into some of these properties. So yeah, so it's just going to be more of the same. And like we said earlier in the show, back in halfway through this year, the projected deficit was looking at 185 billion. I think it's going to be north of 200 billion. Politicians in the government are telling me that the government's going to go for broke. And I dare say that if on the 6th of October it's not enough, we'll see some further announcements after the budget in terms of providing more stimulus, more income support. And what is the impact on the Australian people? Well, it means that obviously, how do you finance these huge deficits? It's through money printing. The value of the Australian dollar is going to be eroded. That's why we're in this business, gold and silver, because we want to preserve our wealth. And while the Australian dollar is being destroyed, I'm expecting gold and silver prices to go high, both internationally but also priced in Australian dollars, because it's not just us doing these things, but every government around the world is projecting. They're all doing this printing, all this stimulus, etc. And also, I think we're going to see our problems compound. They're not going away, and our kids and our grandkids are going to look back at this period and say, what the hell were these guys doing?
Yeah. Happens every 100 years, doesn't it?
Very,
six great countries have all done exactly the same thing. It's history repeating itself, and they all end up in exactly the same position. You know, the $40,000 incentive for a first home buyer is increased to $50,000 for a first home buyer, because the $40,000 won't get them across the line. They still can't afford the repayments. So they give them $50,000, $60,000, $160,000 until it doesn't work anymore. Unfortunately, we do not learn from history.
No, we don't.
See, it's too far apart. It's 100 years or thereabouts.
Yeah,
100 years.
And that's 5 generations.
And I'm not 100 years old yet. So most people don't read the history books, so they don't understand any of this. Where do we go from here? I think John's answered the question. I mean, very simply, the debt levels just continue to increase. And if you aren't protected with sound money, Brian, we've been talking about this for years, gold and silver, then you are in the lap of the gods.
Yeah, exactly. It seems to me that having a reserve currency like the US have had since 1913 is not the way to go. There's no good the IMF coming out and say we've got a special drawing rights, because that's exactly the same thing. I think the only world currency that has worked, will work for the future, is gold and silver, because it's there. It has so many good advantages to it. You can have maybe some disadvantages, but the disadvantages only come from human behaviour, how they operate with it. But I think you'll find out in the future, or as the future comes about, I think gold and silver will develop into another currency as money. I've got one last question before Darryl finishes off, so I'll go ahead. You've already answered a little bit of it, John, but I think it's a good question anyway. What do you think the real reason is why the Federal Reserve, the US Federal Reserve, wants interest rates at 0% for the next 3 years? It gives absolutely no reason for people to save. And is it going to be a catalyst for gold and silver prices?
So what's the real reason? The real reason is the whole debt bubble that we have. The Americans are deep in debt. The Chinese, the Europeans, Australia, you name it, everyone's deep in debt. And so, it can never mathematically be paid off. If they raise interest rates, or if we had interest rates going up, even up a couple of percent, that's going to be enough to basically lead to huge defaults. Particularly in the US situation, it's going to be the corporate sector. So many junk bonds, so many zombie companies who basically have, these companies exist, huge amounts of debt. They're not making enough money to basically meet their debt obligations. You raise interest rates, you're going to kill them off. So in order to avert the biggest depression in world history, that's why they're keeping these interest rates in terms of zero. Now, in terms of gold and silver, so Craig Hemke from TF Metals Report, he made a good point the other week that I was listening to, and he basically said that the key driver for gold and silver prices is real interest rates. So the interest, you take a look at the official interest rate, and you minus the in terms of inflation, and even if you accept that inflation is roughly about 2% in terms of the US inflation rate, what we have in the US context is we have negative real rates, and so real interest rates is what will drive the gold and silver prices higher. That's what the experience was in the late 1970s, and so with official interest rates being zero, and inflation officially being 2%, well, you already have negative 2% interest rates, and so I think that as we start to see runaway inflation develop, between now and say 2022, 23, gold and silver prices will drive higher, because that's historically what has driven prices high, is these negative interest rates. Because you think to yourself, you want to make a return, you want to preserve your wealth. Well, with negative yielding debt, like bonds, etc., with the share market sort of going shaky, where else do you go in terms of wealth preservation? You could go real estate, but also I think you're going to go into gold and silver. And the interesting thing about gold and silver obviously is that the size of the markets are relatively small compared to the relative size of the entire financial system. So as David Morgan has said on this channel, but also in other interviews, you just need a trickle of that money from the global bond market to come into the gold and silver markets, and these prices are going to go ballistic.
I do believe that I listened to Ray Dalio on a number of his speeches, and one of the greatest investors of the last century, and he says basically that any portfolio, if it doesn't have 10% in gold, it's not a portfolio, and he hasn't come up with any reason why a portfolio should not have at minimum 10% gold in that portfolio. Darryl?
Yeah, look, I think at this point it's time that everyone should find themselves a mentor or two or three. I learnt this, as you did, Brian, many years ago, and we constantly refer to Peter Daniels.
We do.
Who has provided us with a wealth of information over 35 years. And, Peter has always said, and this is, and I constantly refer to this, a statement that he made, and it just stays in my mind. He said, "I do not care what poorly executed economic decisions are made in the world tonight. For tomorrow, I'll still be able to party." It is a powerful, powerful statement. And the reason he could say it is because he saved in sound money. So no matter what decisions took place overnight, he was in a position where he knew that he had his own central bank. He was in a prominent position, and not only for himself, but he could help others around him that were close to him. John Maynard Keynes, this is something I'd just like to share with everybody who's viewing this interview. John Maynard Keynes was quoted once as saying, see if I can remember it, "By the process of ongoing inflation," as we're talking about, inflation is a destroyer of people's dreams, it really is. And he said, by the process of ongoing inflation, governments can secretly and unobserved remove important parts of the wealth from their citizens. This process engages all of the hidden forces of economic law on the side of destruction, and does so in a manner that not one man in a million can diagnose. Now, it's Keynesian economics that governments work to and utilise today. Right. And that was his prominent statement, and it still holds up today.
Yeah, exactly.
Right now, I'd buy the dip. Right now, it's really interesting with precious metals. A lot of people buy on a high and sell on a low. You've got to do it differently to that. Right now, we're really fortunate. Only a couple of nights ago, gold went for a dip, and yesterday I purchased, and Brian followed suit. We purchased a considerable number of silver bars for ourselves. And we purchased them for $80 less than we could have a few days ago. What a time to buy. I mean, we snapped up a bargain. Now, some people will say, I'll wait a little bit longer. And in fact, somebody spoke to me the other day and said, well, I think it could even drop a little lower. And I said, well, who cares? I purchased those kilo bars for $80 less than I could have the day or two before. And I feel ever so lucky that I was able to do that. Now, if it drops another $10 a bar, who cares? Drops another $20 a bar, who cares? Certainly not me. There is a bargain to be had right now. Buy on the dips. And this may very well be one of the last opportunities you get to take advantage of silver and gold at these prices. We're all in, and I would suggest it's a pretty good idea to do exactly the same. Wonderful opportunity to take advantage of. John, thank you once again for your contribution. It's always great. You put a lot of research, a lot of time and effort into the session that we have with you on a monthly basis. Really appreciate it, as I'm sure do our viewers and our subscribers. We thank them so much as well for supporting this channel on an ongoing basis. Very much appreciated. And so for now, to all our viewers, subscribers, John, thank you again. Stay well, stay focused, and bye for now.
And bye for now.